Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Tuesday, February 19th, 2008. Well, I hope everyone had a nice President's Day long weekend here as we get back into the flow of things. And today had a little bit of everything, I have to say. There was just a little of this, a little of that, a little bit of whipsaw action, a little bit of gap up action plus failure and so forth. And we're going to go over all of that today as we get into things today. So let's look at the charts right away. And I want to show quickly this. This is the ES intraday, and the ES intraday had a little of everything. And let me grab my trend tool out so we can go over everything. And you can see I already drew in this one line here, and this is the pink line just stretching all the way up in this straight line on a slightly upward angle. And the reason why I drew that in is I want to show you this the keys to this line. All right, this was an early morning line that I drew in here during the chat room, and that's again the intraday stock chat, and you can come check that out anytime you wish by going to the website. But you can see here we touched it at the bottom, and you had a bottoming tail here on the intraday early in the morning. And this is, we're going back to 4:30 in the morning here, and we're talking about Eastern time when we talk about 4:30 here. So what you see here, we connected that low and the second low right there on that candle and drew that all the way up. And notice how these candles continued to hit that line. You hit it right here and pierced it by a teeny tick here on the futures. And then you also had that move up, dramatic move up earlier this morning as Walmart came out with good numbers. And we had a bunch of other positive indicators. You had Castro out of power, which gave the market a boost. And that was a bonus, as well as the market now views Cuba as a possible trade partner. And again, we have all these restrictions on trade with Cuba. Should those go away, the market views it as a positive influence on the U.S. economy. You also have some other issues with oil. Oil was up big today, and we're going to get into that. But in many instances, when oil's up, you have a lot of these components of the S&P and the Dow, which are oil components. And so when oil goes up, those stocks go up, and they lift those indexes as well. Well, that was a good thing up until a point today, and we're going to go into all that as well. So here you see that move up on all that good news this morning. And then all of a sudden, the market opens or gets near that opening point, and we just start to collapse. And this market comes down here and tests that same line. And notice how you can draw a line in like this and just put it all the way through, and when this doesn't exist in this portion, and this line still is in play the whole rest of the day. And that's what happens. You come down, you test that line again, and notice how it's also the 50 moving average and the 200 right here that it's testing as well. You bounce up initially, and you can see that bounce up right there. You retest it, and this time you break. And notice once you break that line, the sell-off that ensues. So you have a major sell from all the way down here to here, at which point you start to gain some more traction again. You move up right into that 20 moving average and that 50 moving average, sell off one more time. And remember, once you come through a moving average, the first test of any moving average is looked at as a shorting opportunity to the upside. So we move up into that, it's resistance. You can short into that, you get that pullback. Then the next time it usually breaks. And now this is another beautiful thing here. Notice how that line here, right? You have this whole line right here drawn all the way all throughout the day. Now look at the move up. That it comes right back to that line there, and you see a topping, little bit of a topping tail there as it touches that line, and then that's it. The market moved to the highs there. That was the high in the around the 12 o'clock, 1 o'clock area, at which point we just started to sell. And you sold down again to the 20 moving average. And on the downside, the first move after it breaks the 20 moving average, down back to that 20 moving average becomes key support. So again, you get a small bounce off that, which is just a scalp play, right back to that 200 moving average, and then it collapses. And this was a dramatic sell based off oil hitting $100 a barrel. Now, oil went over $100 for a small amount of time today. It settled back underneath. It's right now trading at $99.67, but it caused a dramatic sell in this market. This coincided directly with the oil going above 100, and it spooked the markets. And we saw a dramatic sell-off across the board, and you saw the Nasdaq closing down 16 points, while the other indexes closed down dramatically as well. You had the Dow down just about 10 points, 11 points, the S&P down 1.2 points. So really the Nasdaq lagged. But the point being here is that early in the day, the Dow was up 120, 140 points, and it closed down 10 points. So granted, as you look at the whole day, you see the Dow was down 10, 11 points. Nothing major, right? Nasdaq was down 15. Okay, nothing major, but it's important to take the whole view here and say, well, we were up. The Nasdaq was up 20 plus points this morning. The Dow was up 160, 150 points this morning, and we came all the way back to reverse to close on the negative side. So ultimately, for point purposes, it's not a big day, but for reversal purposes, I happen to take it as a quite an interesting day. Now, again, I want to stress that this coincided with oil breaking 100. Now, oil did close back below 100, but the question is now, do we move over 100? And 100's resistance. So now, once we get above 100, that becomes support, and it's very likely we move to 101, 102, 103, 104. So keep that close. Now, notice here how we kind of trended here. You see this bottoming tail? That did signal a little bit of a bottom in the market. We basically traded sideways into the close. The market closed right here, and then after hours, obviously the futures trade till 4:15, and you can see here all of a sudden we got a boost right back up. And what happened there was HPQ. Hewlett Packard came out with earnings, phenomenal earnings. I'll show you the level 2 here, and you can see we closed at $43.95 on HPQ. It's now trading at $46.30, so a beautiful gain on that. That's a large cap stock, so for it to be up that much is very significant. It should help tech tomorrow stay strong. It should also help the Dow as well be up tomorrow, and the S&P. So we can take a look at that, and we'll focus in on that. Now let's take a look at some other charts. So that's the intraday chart broken down, and you can see how the moving averages come into play. You can also see how you have different trend lines, and I can draw multiple trend lines in here as well, folks. And let me take away a couple of these lines and draw in another trend line. And you can do this all day long. You can find different patterns in this market that are key, and it's very important to continue to notice all these patterns, because throughout the day there'll be key components on how you trade and how you react to moves. So just one thing I want to show here, folks. You have a little bit of a head and shoulders pattern right here. You have a shoulder right here. All right. There's a shoulder. There's a head. Now it's a very small one, nothing major, but nonetheless, you have a little bit of a head and shoulder pattern. So you have shoulder, head, shoulder. What you do is you draw basically from this point here to right down to that point. Once you break that point, you have a major fall coming. And look at the fall that ensued once we broke that head and shoulder pattern to the downside. You basically had this whole move all the way down here. So there are, throughout the day, there are little bits of tidbits that everyone should be noticing, different patterns. Patterns are so key. Pattern, price, time, very, very key. That's what we mostly trade off of. You trade off a little level 2 when you're dealing with the smaller stocks, mostly charts and technicals when you're dealing with the larger stocks. All right, now let's focus in on the daily charts here. Let's go to the SPY and see what we can see. All right, here's the SPY, and this is again this is the intraday, and I just want to touch on this. I drew this in earlier today as well. See how you take the high there on that chart, on this candle, and this is the intraday SPY, so it's basically mirroring the S&P again. You have the high there, and you touch it to the next high on that candle, and you just draw it all the way down. Look at how this again comes into play. We used it to note on a breakout here, so when we got over this line, you knew the market was going to continue to move that way. Then you got a small pullback and another move higher. But then watch how we sold off hard, and where did that market bottom out? Look at how beautifully that bottomed out right on that line. So all this symmetry in this market is such a beautiful thing, and I do strongly encourage everyone to come join the chat. Come join the Swing Trade Alerts. Take us for private consulting. We can teach this stuff to you, and it's a beautiful thing to learn, and it will improve trading 10 times. It's a beautiful thing. So now let's look at the daily chart, and we don't have much time left in the video, but I want to just focus in on this. You have a little bit of a triangle formation here on the SPY daily chart, which we need to continue to watch. All right, we're coming up to the point where it's going to break one way or the other. All right, and you can see, let me actually draw this line in slightly more accurately here, because we really want to be as accurate as we can to see the triangle. There we go. So you can see a triangle formation. Now the question is, which way do we break? Do we break to the downside? Do we break to the upside? Should we move up into this resistance line? Because this will be resistance right up here now that I'm seeing. All right, and again, you can see basically from this sell-off here all the way down, once we bounced here, we basically stayed flat to sideways. I mean, look at this pattern. You broke here, sold off to the lows, then you bounced up in one day back to here. You take the top of this candle right here, which was the day in January, the late day bounced in January, where we had that bounce back after gapping lower, and you just draw a sideways line, and look at where we are. That's essentially where we are. Yes, we've been above here. Yes, we've been below here. Yes, we've been above. Yes, we've been below again. But you can see ultimately it's coming into a point here at the middle, at the tip of that triangle, and that's going to be the key. So watch for that, all right? Keep that triangle in focus. There's going to be resistance right up here on the triangle. We're at support on the downside. We do still favor a small little bit of a bounce in this market. We called the bounce for early last week. It did work out. We had the pullback Thursday and Friday, and then again today a small pullback in these markets. We'll see if we have one more move up into this line and possibly to the 50 moving average. All right, let's look at the Nasdaq now quickly. And on the daily, you have the same type of thing, but a much weaker chart. All right, much, much weaker chart. You can almost kind of make out a little bit of a triangle here, but it's almost a pathetic triangle if you ask me. But nonetheless, it's somewhat there, and you can kind of watch it. And again, note how it's been sideways trading. Look at that. I take the high of that candle on that major down day where we gapped down and pushed all the way back up, where we had the 2 days where we did that in a row, and that was after the last 3-day weekend, by the way. And you just draw a straight line over and look at that. It's coming right to the point. So there is going to be a point here where we break one way or the other, and it's going to happen in the next few days, I would think. I would think we're either going to have a push up or a push down very, very shortly in this market. All right, guys, there's more to talk about, but I don't have time today. Come join the chat. Come join the swing trade alerts, the options alerts, the ETF alerts. Come join us. We're going to do seminars and webinars starting very soon, as well as a bunch of other things we'll be unveiling for our subscribers, our loyal subscribers. Come become one. It's a wonderful thing. Have a wonderful day, guys. We'll talk to you all tomorrow. Take care.